Hello, welcome back to All About Real Estate. Real estate news you need to know. I'm your host, G2, with Caldwell Banker Residential Brokerage in Phoenix, Arizona. Last week, Senator Johnny Isakson, a Republican from Georgia, flanked by Joe Lieberman, Senator from Connecticut, introduced the Isakson-Lieberman Amendment to the pending economic stimulus bill. The amendment provides a $15,000 tax credit to homebuyers who purchase within 1 year of the bill's enactment. The bill is aimed at kickstarting sluggish home sales that plague the nation's real estate industry. I'm not going to rehash reporting on the proposed legislation. You can read about that at AllAboutRealEstate.pro. While the proposed tax credit is certainly a step in the right direction in terms of efforts to move home buyers off the couch and onto their computers to begin their search for their piece of the American dream, it is this realtor's opinion that this is a case of which comes first, the chicken or the egg. Let me explain. Property values are down across the United States. This is no news to anybody. According to recent figures from the National Association of Realtors, released February 4, 2009, NAR noted that property values lost ground over the past 12 months. According to NAR's figures, homes in the Northeast depreciated 7.8%. In the South, about 8%. In the Midwest, about 11.5%. And in the Western states, where I'm reporting from, property values have plummeted a mind-numbing 31% from values enjoyed just 360 days earlier. Now do the math. That's a national average of value depreciation of right around 14.575%. Additionally, and according to NAR, the average home price in America now hovers at around $176,000, figures that harkened back to the early 2000s and late 1990s. By region, these figures break down to around $212,000 in the West, $235,000 in the Northeast, $141,500 in the Midwest, and about $157,000 in the South. Now let's do just a little bit more math. And I don't want my message to scare away any homeowners from taking advantage of the $15,000 tax credit that's coming down the pike. However, President Obama and the United States Congress and Mr. Geithner need a reality check here. Let's take a buyer who purchases a home for $175,000 today. If property values suffer even a modest depression of, say, 7% over the next 12 months, that means that buyers of a $175,000 home will lose about $12,000 in value over that period of time, virtually wiping out any gain realized by the $15,000 tax credit. You know, the negative numbers only grow larger as the price point of the purchase increases. For example, what if our buyer makes a purchase of $250,000? Well, that would mean, given our scenario of continued downward slide of property values of around 7% over the next 12 months, that the buyer of our $250,000 home could lose up to $17,500 in value, unless President Obama and his administration can stop the bleeding of property values. Unfortunately, at this time, there is no end in sight to slow or extinguish property value depreciation over the next 12 months. It is absolutely crystal clear that property values will continue to decline unless this tsunami of foreclosures is diffused. There are two possibilities and two possible methods to make this happen and perhaps slow and even turn the tide of collapsing property values. First, lien holders must be encouraged at best or forced at worst to work out mortgage alternatives for homeowners who can demonstrate a willingness toward homeowner retention and who have the resources to do so. Second, and on an equal plane of importance, lien holders must be encouraged aggressively to work with consumers, homeowners, who are trying to sell their homes through the short sale process. You know, the overwhelming majority of inventory across the United States is comprised of foreclosed properties or short sales. Here in Maricopa County, nearly 20% of the roughly 51,000 homes for sale are short sale listings. About 25% are REOs and about 25% are builder inventory. That means that nearly 3/4 of the inventory in Maricopa County is exerting downward pressure on property values. You know, the people of the United States are growing very weary of the bailout fever that has plagued the halls of Congress over the past months. We've been told that TARP 3 is nearly a foregone conclusion. If Congress and President Obama think the American people are going to allow Congress to write yet another check to bail out big banks or Wall Street without an immediate and direct impact to the taxpayer in terms of economic recovery, they're sadly mistaken. Immediate does not mean sometime within the next year or so. Immediate to this realtor means now. Not in a month, not in 2 or 3 months, but now. The President, his administration, and Congress must use every vehicle available to them to force lien holders to get serious about home retention where possible. And failing that, as an option, preserve property values by working more aggressively towards successfully closing short sale transactions. I'm G2, one half of Lori and G2's E-Team of professional realtors in Phoenix, Arizona. Visit us at shortsale.airforcehomeseller.info or give us a call at 623-344-4000. Thanks for watching.